Happy Friday. Good. How about
You're
you?
muted.
Oh, okay. Let me see. Let me see. Okay, I got it. You guys changed the tech on me, and even though I can automate my trades really well, one thing I do have problems with is all the streaming services. However, I'm glad to finally be here.
Okay, well, a couple of things. First of all, you didn't think we were going to get through a Friday the 13th without some type of problem, did you? Because that's exactly what we have on our hands here. And
Murphy's Law, I gotta tell you.
you should have been here the morning that we started up the stream and we had everything working except for our voices. Oh, that was a nightmare. That's why we had to switch some of the text. So sorry about that, but we're going to fight through that. We also don't have your intro video. We're working on getting that back.
Okay.
But welcome here. Happy to have you.
Thank you, Ryan. I love your stories. I appreciate it.
Okay. Okay, good. So what are you going with here today? Let's go ahead and bring your screen on here again, since we don't have the video. Let's just dive right in. What do you got for us today?
We're going to go over our Google play that we did. That was awesome. We were able to profit 147% on that play, and that was called debit spread, so that worked out really well. We're going to go over Tesla and Dash. A lot of them get quite a few unusual whale activity in there. So, want to see if there's maybe a
Ooh.
setup for us to get into.
Okay, amazing. Sounds awesome. Options trading made simple with Sandy starts right now. Ooh, video. Okay, take it away, Sandy.
Thank you so much. Welcome back, traders on Benzinga. How are you guys doing today? Hey, let's go over some of the stuff that we did last week. So we were in a call debit spread. Now we took a 175, 177 call debit spread on this. And the reason we took a debit spread is because we were choosing a vehicle that was going to be good for when momentum was building up, it would kind of push it through. But if there was like not that much momentum and we were kind of going sideways for a couple days, it would have been a great vehicle for that. I often refer to like straight calls and straight puts as like a short board when you're surfing, right? You need something fast and furious. And that's really the type of momentum that you need when you're trading straight calls and straight puts. However, if you're looking at the chart and you recognize we're at all-time highs and you know there's going to be some sort of consolidation there, oftentimes, if you're still looking for that move, all you need to do is change the type of surfboard you're riding. And in this case, it was a call debit spread. So we knew we were going to go bullish, but we wanted, and I basically call a debit spread like a longboard or a paddle board, right? You have a lot of room, you have a lot of comfort to just ride out the waves and kick back. And that's kind of what you do with a debit spread. So what we did here is if we go back 7 days, we actually took it right around here. And what ended up happening is we went sideways, did absolutely nothing. And then all of a sudden, we wake up Tuesday or whatever, and this thing is just flush into the upside. Now, because we were already in it, we actually put it on together on Friday. And within Tuesday, Wednesday, we were hitting, 150% plus. I think I posted that on Twitter, guys. And so typically speaking, I risk 50% of a debit spread. So I had five of those on. So I think we bought those for about 98 cents. It wasn't very expensive, 97, 98 cents. So let's just say $500 for the investment. Only willing to risk about 250 for that. Wake up Wednesday morning and it's about over $700 value. I mean, actually the profit, right? So now we just end up, hey, you get a nice profit like that overnight. You want to take your profits because oftentimes when you get a big flush, you get a big wave that moves you through your target, what are you going to have next? Once again, it's going to be consolidation, and you don't want to lose your profits during that time period. So you either reduce your position or you just take it off. I ended up just taking everything off, taking my profit, and let that go. By the way, if you want to follow some of my information, some of my trades, some of the unusual whale activity that we're monitoring in our VIP community, you could check it out at Twitter. Options_Sandy is where you can find me. So we always have a lot going on each and every day. So let's take a look at some of the charts today and let's just go over it. So if we take a look at SPX, so SPX doing a double bottom here, you can see I was like kind of marking out my plan of action here for SPX, right? So you could see where I was like really wanting SPX to break above here. It did consolidation bands. So you can see for the last couple of weeks, we've just been going sideways on SPX. Still looks very bullish. Why do I say that? Well, we can easily identify trend because price is above the 20 EMA. Now, the 20 EMA is like my reversion to the mean. A lot of people like VWAP. They like maybe several different EMA indicators or SMA indicators to show what the trend is. Typically speaking, if you just look at a chart on any time frame, 1 minute is a lot of noise, but 5 minute, 15 minute, 1 hour, it doesn't matter. If you look at the chart and you see that price is over the 20, it's typically bullish. And then we look at momentum, right? And so momentum is green. It's above the zero line. Now it's pointed down. That could definitely help you kind of identify where we're at here. And you could see where, we're crossing the 100 here and we kind of go sideways, then we go down. And you can kind of look at price and see what it's doing at the same time, right? So with that in mind, as you see the momentum going down, you're getting some red candles. And so momentum actually drives price. And that's why having some sort of momentum indicator on your chart can really help you out because momentum drives price. And so if you can see kind of momentum, what it's doing on the different time frames, and this, by the way, works on all different time frames, then you can actually identify, when there's going to be some consolidation, or if this starts to curl back up like this. It's one of my favorite plays when you see momentum not break the zero, but do this. This is an excellent example right here of waiting for the liftoff, right? You're going to get some powerful moves when you see momentum slide, but stay above the zero line. Perfect setup like this. An A+ setup for me is when momentum is curving like this and you have price that clears the 20 line. So as you could see, it was fake it, fake it, fake it, fake it. And then here's your clearing candle and boom, we go up to here. So it was a really nice play. If you're just looking at the chart and trying to look for some evidence, right? That's what confluence means. It's really just supporting evidence to make your decision to get into the play or not, or to look at the chart and say, what do I have going on here on all these different time frames? I typically, let's just go, instead of going into all these educational tidbits, let's start taking a look at some charts. Where are we going to go from here? Boy, we are just still bullish. I keep waiting for, I'm sure everyone's just waiting for a pullback. You could see, we kind of have a divergence here, don't we? We have momentum right here slide down. You see the momentum sliding down? And really from here to here, we don't have it. And it just keeps going up. In fact, this momentum here is higher than this momentum. Yet when you look at price, it's opposite, right? So you have momentum high here and price is higher, but momentum's lower. We call this a divergence. And the only thing I don't like about a divergence, it's great to identify it, right? But you don't know when it's going to actually correct itself. This typically is a symptom of, hey, look, we have a divergence. Price is not following momentum. And if momentum drives price, then there's an off-balance situation going on, and it will be corrected. The thing I don't like about divergences is you don't know when it's going to correct. So though you see it, it could still last for, another 5 days as an example, right? It could work itself out while price is consolidating and then get all good. Then the divergence is gone. So that's the only thing I don't like about a divergence. However, we are extended. We've been extended, and we're just basically waiting for either some more consolidation. And what happens when we get consolidation? It's either or distribution, right? We're either going to break out or we're going to break down after accumulation. So as we're looking at the Qs still really look good. And you can see that our indicator here says 526.48 was good on a day chart for a long. And the next target is 532.51. We're on our way there. So let's take a look at a 15-minute. So we had a big gap up here, and you can see that we immediately, we didn't fill the whole gap. Now, there is a kind of a misnomer that, hey, typically speaking, when price is moving into a gap, that it has to fill the whole gap. It typically does not. Oftentimes it does, though. I will tell you, healthy price action is a fill of the gap, and then you turn around and go in the same direction that you were going. But when you have something like this and you're thinking, oh, we have to fill the gap, no, we don't actually. It filled probably what, 80, 90% of the gap? It's done. Oftentimes you'll see price fill 50% of the gap and then turn around. So with that in mind, gives you a little bit of more flexibility in your decision making for your strategy, right? What's step one, step two, step three of what I'm going to be doing next? You kind of have to already have that plan of action. Unless you've done your studying, you have your plan of action, you automate it, and you just let it go. And that's typically what I like to do. Because it always seems like when I do the analyzation and then I get back to the chart, then all of a sudden I want to reanalyze what I analyzed. So if you're if you're a detail-oriented person like me, type A. This gets you into trouble, right? Because you already did your homework. Like, why mess with it? But of course, we come back to the thing. We go, oh no, we reversed. I should probably get out sooner than what my stop loss was. And then you make a change to only do what? Only to whatever ticker that you're on for it to actually, as soon as you get out, to make a U-turn and go right in the direction that your original analysis was already kind of forecasting. So with that in mind, I tell you, hey, look, if you're an automator, just stick to it and let it play out. You already have your plan of action in place. Let's take a look now that we've seen QQQ and how strong it looks. It really, as far as today on a 15-minute chart here, we did almost a full gap fill, waiting for it to actually get above that 20, right? And then you can see how momentum broke the zero line. So it's actually a little lower. So this could be the high, low, and then a lower high. We could get what? A double bottom or break the bottom and get a lower low. So that's typically speaking on all time frames, how you would look at trend and identify where is this going. So let's take a look at Tesla. And okay, so a lot of flow coming into Tesla this week, a ton of it. And so, and I noticed that in this unusual whale activity, that they're laddering positions. And what laddering means is that, their first batch, they're buying 435. Then they're going to 450. Then they're going to 460. They go all the way up to 510. 510. And they're using some farther away dates. So what they're doing is they're really forecasting for themselves a really large play to the upside, but it could take some time to get there. So when we see something like this, the first target was 435. Let's take a look at Tesla on a day chart and let's see. Well, we're already, let me get rid of some of this stuff as I make more. Let me just go over here. All right. So you can see this trend pivot line right here. I love these pivot lines because they show you the vertical. By the way, this is a thinkorswim. It is a custom indicator, but it's not proprietary. I'm sure that you could research it on my YouTube channel, Trading Made Simple with Sandra. I think there's a dash in there somewhere as well. Trading Made Simple dash with Sandra, I think. So if you take a look, this trend pivot line is nice because on all time frames, it actually draws out the vertical trend lines and it's based off the last pivot high low, which is really convenient not to have to do that on every single chart that you're looking at if you really prefer that indicator. And then it also gives you the horizontal levels of the last pivot. So you could see the last pivot high right here and the last pivot low on a day chart. And so look at how we're actually right at this vertical peak here and we're actually touching it. So we've done a fake out, fake out, fake out. And why do I say fake out? Because whenever price gets to resistance or support, any type of support or resistance, it will oftentimes just stay there for a while and consolidate. And the energy is just trying to re-energize itself to see, hey, is this going to act as resistance or are we going to have some of our population get in there and rush price through it? And so as you could see for the last 3 days, we've been just touching it back down, touching it back down, touching it back down. So we're really looking for a confirmation candle away from it. However, you can see all of the money coming in is trying to push Tesla, right? It's trying to help get that wave to go through it, with the next target actually being at 435. Now let me take a look at the high here. The high here was 431. So getting close to the first target. And from there, it just keeps going up all the way to 510. You could see momentum kind of coming down here. So we're really looking, right, for momentum to kind of curve up. And as I'm, kind of like we're waiting for that curve right here. So sometimes what we'll do is we'll just consolidate until it finally decides to break through here. What else could it do from here though, right? Because unusual whales, they're taking like really long dated calls, so that the time decay doesn't really affect them. Now you have to think about that when you're looking at information to try to get a forecasting idea, because if they're taking expensive calls that have a very far expiry date, then that means that they recognize that there's a good probability that this is going to play out, but they don't want the time factor to ding their contracts. And we know that theta time, when you're buying an option contract, could really ding your time factor. So what we're doing here is we're really looking for, if you're going to take short dated calls, to be careful, because this may drop down all the way back down to the 20 to do a reversion to the mean before it goes back up. So you got a high, you have a higher high, got a double top right here, changes its mind, then gets a higher high. So really, what are we looking for? We're really looking for a higher low, aren't we? So there may be a pullback before this thing really starts going. And here's your, on a 15-minute chart, looking for a break, right? We need to come right up here. Price needs to come right up here and match this or break it. If we do a double top, we could go back down. If we break that top, we break that level of consolidation, we could go to the 440 level. You see how that vertical trend line carries through? I actually like this for an automated trade. We could say, hey, look, if we break above this, and by the way, when you look at levels and you're making a decision, it doesn't have to be exact when you're automating. You're looking for that zone, right? Nothing is like a very thin line in the sand when you talk about price movement. So just keep that in mind for all you detail-oriented people out there. I know you're probably wondering, but if you take a look at this area and I say, if it breaks above let's say 432, and you can see this, these are targets that are created by average true range. So if, we could use the 427.37 as an example. That's very close to the last pivot high on the 15-minute. But you could use the 427.37 as your entry. You could even, knowing that price came all the way up here, which is 431.60, if you were thinking that we could do a double top and break the top as an example, because here you have your low, you got your a higher low, and then could we make another one, right? So as we take a look at this and we stay above that 20, it really kind of looks good along with the flow and the 1 hour. It does have a little bit of a topping pattern here, and you can see momentum kind of going down. I still like this as maybe an automated trade. Let's do one in here while we have the time. So as I'm looking at this, I'm going to say, hey, look, if we go above that 430, 429 to 431, I'll take that last pivot high break. So if we go above, let's do the 430.58 right here. If we break above 430.58, we're going to be coming up to break this top and come up here. 430.48. So let's use 430.50. So if we go over to our trade tab here, and then we end up coming right over here to our, let me move this, get that out of the way. So I'm already on vertical. If you've never done a debit spread and want to try it out, this typically is like all of your trades, the different types of strategies, right, that you could actually take. And so most of you, or most of us, we're on a single, right? We're doing long calls, long puts, and those are short boards. We need fast and furious to come through to get us to our target. If you want a little bit of a longer board, you could take the vertical. And so that's what we're going to do here, because we recognize that Tesla could go sideways here for a little bit. Now, I always like the at the monies. They're just a very easy way. Oftentimes people make strike so complicated. Typically, you're picking a strike that's at your trigger level or it's at your target level. So that's a very easy way to look at that for when you're buying straight calls and puts. So let's just make it easy and say, okay, and you can see the split in color here for thinkorswim. That split means that's at the money, right? It's the closest to where price is at right now. So if we were to take at the money call as an example, by the way, let me show you the difference too, for those of you with small accounts. If you take a single call, a 425 call, by the way, that's a 0 DTE, we actually want a 1 week out. Now let's look at price, looking at a 1 week out here. If I wanted a long call on Tesla, it would be $1,405 to get that long call 425. Now, if I break it down to a vertical, how much is that going to cost me? Look at this, guys. $125, just to show you the difference too, right, with the trade vehicle. So now if you have a smaller account, this is a great way to grow a smaller account. It has less risk. It also has less reward, right? It's going to have less reward than $1,405 call, but it's a great way to get into a position, into a play on a higher ticker item that you wouldn't normally play. There's a lot of people that just don't have that type of risk and want to risk it. So as we come over here and we just take a vertical, we can then say, okay, how many trades, how many contracts do I want? Now, typically speaking, you're going to use 1 to 3% of your entire portfolio value in one trade, right? In one ticker. So for this as an example, I'm saying, hey, look, my maximum risk is $500 here, right? And what is my reward? Let me take a look at that. My reward, max profit is 700. So my max loss is 550, it's telling me, and my max profit is 700. And how you get that is you just confirm and send, but you only hit it once. A lot of new people will hit that twice and just get it inside the trade and not really analyze where their max profit and max loss is. So as we take a look at that and see it, I could say, okay, though that's my max loss, if there was like a black swan event or something over the weekend, typically speaking, for a debit spread, I'll do a 50% profit or a 50% loss. So think of it in those terms. So really, I'm only risking here $250 to make a little bit more than that, right? Because it was $550 to make $700. So it's almost like a 2 to 1. So I'm really looking, and by the way, because I have 5 contracts, you may not, but because I have 5, at the 50% levels when I start taking some off and then let some runners go. Unless you can see something on the chart or something as a news event that would, change your thought process. So here, I'm going to go over to the gear icon and I'm going to click it. And then I'm hoping you guys could see, I haven't done this. Let me take a look and see. Oh, you can't see it. So I do have to change. Oh gosh, let me see. Sorry about that, guys. Sorry I'm running late. Okay, real quick. So what did we say the price was going to be? I think it was $430.50. So what you do here is you come down here and you just click it. You'd never even know that this is actually where you program if I wasn't here to tell you this, right? I mean, look at this. You can't even tell that there's nothing going on here. So, and then what you do is you just click method and it defaults to mark. Just leave it at mark. The trigger is less than or equal to is the first one. The second one is greater than or equal to. So here we're going to use greater than or equal to. And if you ever get lost, you could just look at the writing down here because that's actually your programming, is this writing right here. And you could see where it says greater or equal. And in this box is where you're going to put the stock price. So 430, and we said 50, doesn't have to be exact. So when this gets there, I want the option contract to trigger. But do I know where the option contract price is going to be? Absolutely not. I do not know what the option price is going to be when it gets to 430.50. So what we do is we just say, hey, put this, I want to buy the ask, and then we say good till cancel because I don't know when this is going to trigger. Oh, that's got a lot. That's got an interesting. Could be just because I'm streaming. I can't seem to get that to go down and do it. Oh, that's interesting. So I'm going to do the ask here. Oh, that's not working for me either. That's interesting, guys. Ask here. Let me save it here and let me see if I can do something here. I can change this to good, they'll cancel. It never happens. So when you use the drop-down menu, you're going to say, hey, by the ask, I'm going to just be an aggressive buyer of this contract. You could see that the limit price is 115 right now, but do we know what the limit price will be when it gets to 430.50? No. That's why we're just going to say, hey, when it gets to 430.50 and you enter me into this called debit spread, then give me the ask price so that I'm not off on my pricing and I can actually get into this when it triggers. So it's not letting me trigger it this way right here, but I'm going to go ahead and take it anyway. I don't know if I can. I don't think it's going to let me do it. Let's see. Yeah, it wants to get me in right now. It's actually saying it's at 115. So what I'm going to do is I'm going to see if I can program this at the 430.50 level. If not, then what I'm going to do is set an alert and get into it when it hits that. But I'm telling you for a fact, you'll be able to get into this. Just use the drop-down menu, use ask, and then we'll be into this play when price hits 430.50. And the reason is because it's kind of topping off right now, but I can still see the energy positive, but we want to make sure that it doesn't do a double top and then go down to the reversion of the mean. We don't want to be that. So that's why automation is so great. And if you want to learn more about automation and coaching, go to tradingmadesimple.org and we will see you there. And I'm going to try this one more time. Oh, here's man right here. Let me see if I can do ask. Perfect. Right here on the front, guys. If you have any issues sometimes with the option contract side, just know that you can link it right here to ask. We're not going to give them any more than the ask price because we're giving them full ask price when the price hits 430.50. Now when I hit confirm, does it actually say it? Yep. Oh, let me just read it to you instead of changing the screen. God knows how long that will take. But anyway, it says right here on the screen, buy 5 vertical Teslas, 427.50 calls, when price gets to 430.50. And that's what we're going to do. So we're going to be a little bit at the money at the time that this happens. Oh, that's interesting to think about. When I think about it that way, that will be above, will be in the money. Let me put this to 430. Let's see here. What was it at? Was it at 425, 427? I'm going to do 427. No, I'm going to do 430 and then put this at 435. Let's get it over there. Ooh, no, 432.50. Okay, so that's what I'm going to do it at. So what I'm doing is I'm using my trigger level, right, which is 430.50. It's close. 430 as the at the money debit spread. So I'm doing a 430 call. I'm selling the 432.5 call, and that allows me to get into this trade at or about the price of the 430.50. So then we can move the needle from there. All right, guys, now I'm going to hit confirm and send, and it looks good above 430.50. Perfect. I am now, it's going to be waiting. So when I go to this monitor tab, you're going to see it working in your folder, and it's working because it's waiting for that condition to be met. So this is a great way to automate your trades, guys, and wait for the conditions to play out so that you don't hit a reversion to the mean trade while you still want to go long. All right, guys, sorry about being late today. I hope you have a great weekend, and we will see you next Friday.